We are live. We are live. If you're on here, go ahead and share this video. If you're on YouTube, click the subscribe button. Facebook, click the like button, click the share button. Today, we're going to be talking about raising capital for your startup. Real basic. Just waiting on a few more people to get on. Waiting on a few more people to get on. We're going to start in 5 minutes. Go ahead and share this video. Welcome to another live video, live training for Crowd Wall Street. Go ahead and share this video. We're gonna start in a couple minutes. Hey, Miss Harris, we're gonna get you on one of these lives on a Wednesday night, so be prepared to get a inbox from me. All right, we're gonna start in 1 more minute. We're gonna get started in 1 more minute. Go ahead and share this video. We're gonna get started in 1 more minute. It's not gonna be a long training. It's gonna be something real short and sweet. And we're gonna talk about raising capital for your startup. Mackenzie, thank you for chiming in. It's Serena. I believe I pronounced that correctly. Thanks for chiming in. Y'all go ahead and share this video. All right, so it's 3:05. Like always, being considerate of people's time. Today, we're going to talk about raising capital. Now, there's plenty of different, avenues as far as grants and loans and things of that nature. But everything that I discuss with you guys from here on out, even before, is really we talking about the space of crowdfunding. We're talking about the space of venture capital. We're talking about the space on private equity. So everything that I'm teaching you guys, everything that I'm talking about is to educate you guys on this arena, on this playing field. So for those who this is your first time chiming in on this video, listen, every Sunday we do a live training, whether I'm training you guys on crowdfunding in the startup world, or we educating you guys on finances or investments, things of that nature, on how to start a business credit. And every Wednesday night we have what's called Crowd Wall Street Entrepreneurs. So Crowd Wall Street Entrepreneurs, we interview entrepreneurs. And the whole purpose of that live is, I always say many times we get on social media and we get misled on what success is. And we see people who may appear to be successful on social media with, flashing money, the cars, the houses. And for those who are inspiring to get to that level of success, we may be misled to think that, I can start a business today and I have what that person have tomorrow. And a lot of times when people document their success, they don't document their struggles. They don't document their obstacles. They don't document, issues that they came across. So the purpose of our live is to actually have a conversation with entrepreneurs who can actually talk about their issues, talk about, things that they struggle with as an entrepreneur, as a small business owner, just so you guys can get an idea on what it's like on being an entrepreneur, what it's like on starting your business. So for those who don't know, Crowd Wall Street, excuse me, I'm trying to funnel through two things. Crowd Wall Street is a crowdfunding platform. So with our platform, what we do is we help minorities and Black founders raise capital for their startups. And the whole idea is we want to create an ecosystem around that asset class of startups and even real estate and project developments. For the past couple of weeks, we have partnered with VC firms, private equity firms, and we want to create an ecosystem where we can help a startup get their business off the ground and to continue to raise capital to a potential IPO, which is initial public offering, which is going on the stock exchange. So we came about starting this company because we understand the barriers and obstacles that Black founders and minority founders tend to go against when it comes to raising capital for their company. Many times you can't go to the bank because we don't have the proper credit, and we may be a startup, so no banks want to take that risk and giving us a loan. We may not have the proper credit to get the SBA loan, so we just have to either take out of our personal savings or use our personal credit cards to get our business going. And in this arena that we're in, we have seen statistically have shown that a lot of Black founders found it hard to get venture capital funding. Maybe only 1% of a Black founder gets funded from a VC. So there's a big gap, of wealth gap in this arena, which is why we tapped into this arena, which is why we started Crowd Wall Street, because we want to be able to create an ecosystem for our startups to be able to receive capital and to receive proper resources to create and have successful businesses. So again, if you're looking at this from YouTube or my personal Facebook page, I am going live right now in our Facebook group. You can find us on Facebook at Crowd Wall Street Group. Join our Facebook group where trainings like this, we're going to be educating you guys on crowdfunding, what crowdfunding is and how it can help our community, how it can help our minorities and Black founders to raise capital for their startups. Also, you can create a free account on our website, crowdwallstreet.com. It's a free account you can get on. You can check out Crowd Wall Street University, where we have some basic training on what crowdfunding is. And if you're an inspiring entrepreneur, if you're looking to raise capital from the community, we will educate and teach you on that. And also, if you maybe not that entrepreneur or business owner, but you want to support, there's an opportunity for you as well to support as a backer or support as an investor. Now, I'm not going to get into details about crowdfunding. I did that, I believe, in another training, but we will eventually talk about that. So today we're going to talk about raising capital for your startup. And I'm pretty much going to give you a background, basic training on what goes on behind the scenes. Because many a times, like you see Apple, you see Facebook, you see Tesla. A lot of times when we realize these companies are already on the stock exchange. They already went public, but we don't understand what happened prior to that. So I'm going to give you a backstage secret access on the process that these companies go through before they even go public. So there's a process way before then, a 10-year, 7-year, sometimes 15-year process before a company goes public. So this is my first time sharing my screen on here, so give me a minute while I work on that. Again, go ahead and share this live. Let's see. All right. Can you guys give me a thumbs up if you can see this? Give me a thumbs up if you can see this. Give me a thumbs up if you can see this. All right. All right. So here we're going to talk about raising capital for your startup. So again, this is just the beginning stage of our training, and we understand that many of us are not too familiar, with crowdfunding. We're not too familiar with this industry. So the goal is not to feed you with a whole lot of information. I want to take this thing slow. So I want to give you bits and pieces every Sunday where we're going to educate you on the process. We're going to educate you on crowdfunding. We're going to educate you just in this industry as a whole. So that way, whether you're an entrepreneur or you're an investor or a backer, you kind of got an understanding on how this thing works. So when raising capital, these are the major players when it comes to raising capital. Obviously, you have your entrepreneurs. With the entrepreneurs, obviously they're seeking funding, they're looking for guidance, they're looking for resources. In the Black community, those three things can be difficult. It's hard for us to get the funding because we don't have the proper documents. We may just be a startup, so we don't have no revenue or any traction or social proof as of yet. So a lot of times we build our businesses just basically bootstrapping. Guidance, many of us find it hard to find guidance. And, there's a lot of business coaches, a lot of mentors, a lot of people out there like myself that help startups, but sometimes people working off shoestring budgets, and they can't really, afford for a mentor or, a business coach or a business consultant. So my recommendation there would be, if you don't really have the budget to pay somebody to help consult you or coach you through the process, YouTube University is your best friend. And then resources, for years, especially in the Black community, we've been empty when it comes to resources because a lot of this stuff being subtracted from us. So it left us in a position to struggle to get resources to help us get our business going and keep our business flowing and keep our business scaling. And part of that resource is capital raising, getting capital for our businesses. So the other major player is investors. So you have investors. Obviously, every investor, for the most part, 99.9% of investors, they're always looking for the return on their investment. In most cases, you may have that 1% investor that, hey, I just want to get involved. I want to enjoy the process. I like working with startups. Yeah, return on an investment is a priority, but you have some investors that just like the process. They like working with startups. They like to get hands and feet wet and helping, entrepreneurs get their business off the ground. Then you have called passive and active investors. So what a passive investor is pretty much an investor that writes a check, whatever you need, they give it to you, but it's a hands-off type of transaction. They're not really involved in the day-to-day operation. They'll like to get an email maybe once a week, twice a week, once a month, but it's more hands-off. Obviously, active investor is those individuals who actually not only write you a check, but they want to actually be involved. And in most cases, the active investors want more of a percent ownership in your company because they're going to be hands-on helping you out. So these investors can be called angel investors, which we'll go over. It can be the crowd now, which is crowdfunding. It can be VCs, which is venture capitalists, and it can be private equities or institutional investors, which is the last one. So with institutional investors, they're in the arena of their own. So with institutional investors, you have what's called banks, hedge funds, insurance companies, endowments, and more. So when you're talking about raising capital, these are the three major players that you should be familiar with. Even as an entrepreneur yourself, you should be familiar with the process of an entrepreneur. How do I position myself to attract these particular investors? Because each investor have their own investment thesis, meaning you may have an investor that only specializes in retail industries. You may have an investor that only specializes in startup companies. You may have an investor that only specializes in manufacturing companies. So that's one of the key things as an entrepreneur to keep in mind of is like, okay, what industry am I in? What's my business model? And what type of investor do I need? Because eventually what I have seen, people who are so eager to raise capital as entrepreneurs, you're reaching out to everybody. Anybody that you know as an investor, you're reaching out and then you're getting turned down because you don't understand, number one, that investor investment thesis. Number two, you're not building rapport. You're not building relationship. Capital raises is more than just asking for money. Even when it comes to banks, I know it's easy to go to the bank and say, I need this amount of money. But how about taking that step further and building that banking relationship with that bank manager or with, the branch manager? And it's all about relationship building, but that's going to be another training. So the major players you have in this game called capital raising is the entrepreneurs, investors, and institutional investors. So before any round is funded, your company will be evaluated on your business idea. Does the idea make sense? Do the investors see a future in this idea? Your business model. How's your business model set up? How are you going to create revenue? What's your cost of goods? How do you plan on marketing your company? Your business model plays a factor in it. Management. If I'm going to invest in your company, who is part of your team? Who are you working with? If everybody is inexperienced and everybody don't know what they're doing, then I don't have trust in the management team. So you may have a good idea and you may have a good business model, but you might have a poor management team. And if you have a poor management team, then your idea and your business model really wouldn't matter because you don't have the proper people to execute that strategy. Market size, track record, and obviously risk. So these are the things that investors, to include banks, look at to see if your business is worth invested in. Any questions so far before I move on? Questions on your end? No. Yeah. Any questions so far before I move on? Mm-hmm. So let's move on. So here is the business funding phase. So at the very bottom of the pyramid, you have what's called pre-seed funding. At this stage, this is where your business is really having an idea or having concept of what the business may look like. And as you can see to the left, this is at the stage where it's a high risk. And because if it's a high risk, obviously it's a high reward. And that's with anything involving investing. When you're investing in something that's high risk, you're going to get a high reward based on that high risk. So at the bottom of the pyramid, you have what's called pre-seed funding. And here, this is where you can raise capital from the FFF, which is the friends, family, and fools. Fools is funny because these are the people who don't know anything about business, don't know anything about your business model, but you came to them, they got money, and you came to them and say, hey, I need $50,000 to start this business. They just give you the money and not no due diligence or anything to that nature. So that's where friends, family, and fools come from. Self-funded. Obviously, as an entrepreneur, You have personal credit cards. You have personal savings that you can use to jumpstart your business. And then you have now crowdfunding. Crowdfunding is basically what we do, what we come in at, is to help you get your business idea up and going, to help start gaining that traction. At this stage, the business really don't have no sales, no revenues. You're just getting started. You're just trying to get to that next level. So just like with any other business, you need the money to get from point A to point B. Then once you pretty much are successful in raising capital at that pre-seed funding, then you move up to what's called the seed funding or a seed round. You will hear the term round a lot of times, and that's really what this is. It's a round. So at the seed funding stage, this is where you will have your minimum valuable product, which is the MVP. The minimum value product basically means that before this phone came out, they had something basic. It was a basic phone where, I could get on, I can make calls, and I could receive calls. So if I was creating this phone, that'll be my minimum valuable product. I can introduce this to a group of people. They can get this phone, they can dial, and they can receive call. Once I get feedback on that, and they like it, then I can move to the next level, which is a Series A, or now I can start adding more features to it. So typically at the seed funding stage, this is really where your equity round come in at. So at the beginning stage, equity can play a factor, but that's more so rewards based if it's dealing with crowdfunding, or debt, which is you can still get bank funding, which is debt, or you have that, rich uncle or rich dad or rich sister, that may lend you the money, but as a loan. So now when you move up to the seed funding stage, now you're dealing more with equity. Why? Because now you're dealing more with angel investors, you're dealing with accelerators, you're dealing with venture capitalists, you're dealing with incubators. So at this stage, you're at the development stage. So these particular people, investors, obviously will want some type of equity ownership of the company because now they're helping you out in a development stage. Once you get your prototype done, you end up getting traction, you're getting feedback, you're getting social proof, and you decide to raise capital because, again, you can stop at the seed stage. Once you get that development stage going and you gaining traction and you got social proof and now you're bringing in some type of income, you can stop there. But these are for people who's looking to take it to the next level. So now, once the seed stage is successful, now you can move up to the Series A through E. I think it's more, but through A through E. And this is a stage where now you're looking to scale your company. You're looking at bringing in, $1 million+ a month in your company. Now this is the stage where you have a product market fit. Product market fit basically means there's a market out there for your product and service. So through your pre-seed and your seed stages, those were your development stages where you was getting it out there, you was testing the water just to see if there's a market out there and what's the reaction to the market, where you can get back, make some changes, get some feedback. But at the Series A, you already bringing in consistent revenue. You have a user base. You already have a customer base. You have some following. You have traction. So now you're dealing more so with VCs and still crowdfunding. And I'll explain that after this. But now you're dealing mainly with VCs, and I should have had private equity. So you have VCs and private equity firms that comes in at this stage that helps bring in the proper resources, bring in the proper funding to scale your business to the next level. Now, once you get that Series A done, you scale your business to the highest max. You're bringing in $1 million+ a month, $2 million+ a month. Now you're looking to go public, which is called an IPO. Now, look at this. I just started from pre-seed, right? I just started from the pre-seed stage, right? Look how many steps, and this is just general. There's a lot that goes in between these stages, but when we buy stocks, look where we're buying the stock at. We're buying the stock at an IPO. We're buying the stock at the highest level of the pyramid. But look at the investors and everybody that's involved at the beginning stages. This is the opportunity that Crowd Wall Street is bringing to you guys. This is the opportunity where now, where at once in the past, accredited investors and wealthy individuals were the only people, the only investors that can participate at the pre-seed, seed funding, Series A and up at those stages. So really, when it goes IPO, that's when the public have the opportunity to invest. And as you can see at the top, there's low risk, which is low rewards. So a lot of times we won't really see a big return on our money when we buying stocks, because at the end of the day, it's like there's really not a big risk involved. So it may take years for us to really see high returns on our investment when it comes to stocks. Katiana, I see your question. I'm going to answer in a few minutes. So again, this is basic funding when it comes to when raising capital for your startup. Many people start at the pre-seed and stay there, and which is for the most part self-funded, family and friends, or they go to the bank, and that's it. But there's an opportunity for you to raise more capital, to have access to more resources when you move up the pyramid. So go on to questions right now before I move on. Seems like there's a delay. All right, so I'm gonna answer Katiana's question. How do we get in front of investors? I would say this: in today's world is much easier than it was before, thanks to the internet, thanks to the pandemic. Everything is virtual now. But one of the ways I found useful is LinkedIn. LinkedIn is very much different than Facebook. In this arena, you will find most of your investors on LinkedIn. And again, that's one way to get in front of investors. Start connecting with people on LinkedIn. Also, what's popular now is a lot of these companies, VC companies, angel investor companies, they're having online events now, and they're having ways where now you can actually join pitch competition to get your business out there. But the biggest thing is just building relationships, finding out who the investors are, networking, connecting with people. Also, a great way to find investors is to connect with other entrepreneurs. When I say other entrepreneurs, it's other entrepreneurs who have raised capital. Because if an investor believes in that entrepreneur, they will also more than likely believe that entrepreneur will bring good, other entrepreneurs to the investors. So if an entrepreneur already raised capital from a particular investor, and you talk to that entrepreneur, build that report, ask them what the process was, what it is that investor is looking for, and you tell them your idea, you tell them what business you got going on, they'll be more likely to tell you, yeah, this investor may invest in your company or may not invest in your company. But now you'll have a better chance on presenting to that investor, because now you have that warm introduction. Now that entrepreneur can talk to that investor, say, hey, I have a friend of mine who I just met. I believe they have a good business model. I think you should take a look at it. So the biggest thing is just obviously building rapport, utilizing LinkedIn, networking with other entrepreneurs who's in the process of raising capital or have raised capital in the past, and build a relationship with investors. Have one-on-one conversations with them just to learn more about them, not just to say, hey, I want to pitch you my idea, or hey, look at my pitch deck, or hey, I'm looking to raise $100,000. That's completely wrong. Your message will get ignored. But if you reach out to investors, have that relationship, find out more about them, find out their investment thesis, find out what companies they invested in. Some of these investors or VC firms, you can go on a website and see previous companies that they invested in. And if you look at these companies and they kind of don't match what you're doing, then 9 times out of 10, they may not be interested in your company. So there's a lot of research on your behalf and a lot of relationship building that comes with raising capital. Hopefully that answers your question. It's delayed.
Different.
Just in the group. Any more questions? Any more questions? So again, this is a short training. I'm gonna do a little overview for those who just chiming in. When it comes to raising capital, if you're a startup, you're an entrepreneur, and when it comes to raising capital, this is a general basic understanding on the phases on raising capital. So at the pre-seed stage, that's pretty much at your idea, your concept stage. And typically you would get funding from either friends, family, or fools. You either self-fund your own startup. You can now have access to go to crowdfunding. And at this stage, pretty much the startup has no sales, no revenues. So any investor that invests at this stage is a high risk. And because of the high risk, it's a high reward. And as I was explaining before, a lot of times we, as the public, we end up getting, as an investor, let's speak from an investor standpoint. As an investor, we typically get at these startups or invest in these businesses at the IPO stage. And as you can see at this pyramid, there's a lot of investing going on before that IPO stage. So where we get in at the IPO stage, there's angel investors, VCs, and other individuals that's getting in at the earlier stages. So when it comes to the high rewards, those angel investors will see a higher percentage on their ROI versus us that come in at the top. So understanding when you're investing in these startups at the earlier stage, you can see a ROI at 200, 300, up to 700, up to 1,000% return on your money versus going IPO. And that's the beauty of what crowdfunding is bringing to the table, because now you have the opportunity to invest as early into startups at the pre-seed stage. So once you get the concept, you get the idea, you use that money to get, the business operation going and get your prototype done and start marketing, your idea, your concept. And then you move up to the seed funding, which is now you have your minimum value product and you have your prototype. So here, if you're looking for funding here, in most cases, you're going to give up some type of equity. It could be 5%, it could be upwards to 20, 25% based on who's investing in your company and what all they're bringing to the table. So you're still at the development stages, but just at another level. And then at the Series A stage and Series A plus, at this point, you have a product market fit, meaning you already have traction, you already have social proof, you have a consistent revenue base, and you have a user base where now you're looking to scale the business. And typically at this stage, many companies and many VCs and other investors, their whole objective at this stage is to help prepare you for that IPO. And then obviously when you get to that IPO stage, that's when you're offering, shares to the public. And so as you can see to the left, the earlier you invest in startups, the higher the risk, the higher reward. And we'll go over that in another training. And as you move up the pyramid, you can see that it becomes a lower risk with obviously a lower rewards, because at that top pyramid, there's really not a big risk anymore when it comes to investing in startups. So again, like I said, it's going to be short and sweet, straight to the point. If you have any questions, put in the questions. If I can't answer it now, I'll respond to you in the chat box. So look, if you're on here, if you haven't done so already, go ahead and follow us on Facebook, Crowd Wall Street. Follow us on Instagram, and we also have a YouTube channel. And you can see our previous videos that we did on Crowd Wall Street Entrepreneurs, where we interviewed 2 entrepreneurs about their business, about their struggles, and their future plans. If you are an aspiring entrepreneur and you want to be a live guest on our Wednesday night live, go ahead and send me an inbox, or one of the team members send us an inbox, and then we'll schedule a time for you so we can interview you live in front of our groups. And our website is www.crowdwallstreet.com. You can go ahead and create a free account. Check out Crowd Wall Street University to learn more about crowdfunding. And I just want to thank you for the time. Again, share this video. We have more training to come. And that's it.